Hi, I'm Justin Baas, Senior Consultant at Oak Wealth Advisors, working out of our Raleigh, North Carolina office, and here to share our April 2026 market update. The market started the year slowly and hit a rough patch in the first half of March due to the geopolitical conflict in the Middle East. As you can see, the S&P 500 was down by over 4%, and developed international markets, following a robust year last year, also posted a negative return, making the first quarter of 2026 the worst quarter for stocks since 2022. However, the markets rebounded strongly in April. There were multiple double-digit returns, specifically in US large and small cap stocks, as well as international emerging markets, closing in on almost a 15% return in just 1 month. Powered by corporate earnings, the US stock market logged its best monthly gain since 2020. Digging deeper into the US stock market, value stocks have posted a 10% return year to date, while growth stocks hover around 1%. Building on the returns in 2025 and in April, the equity market has posted incredible returns over the past year. On the fixed income side, municipal bonds held solid, returning just over 1%, as aggregate bonds stayed relatively flat throughout the year. Oil prices, inflation fears, and uncertainty surrounding the Fed and potential rate cuts in 2026 have kept the fixed income markets stagnant. The 10-year Treasury yield rose and ended the month at 4.38%. This graphic, provided by Dimensional Fund Advisors, serves as a good representation of how the U.S. stock market has historically performed following major geopolitical events like the U.S.-Iran conflict this year. For many investors, global tensions can create a lot of uncertainty and worry, but what this data tells us is to remain steady in your investment approach during times like these. Although past performance isn't a guarantee of the future, remaining globally diversified and taking an appropriate level of risk for your situation remains as important as ever during these turbulent times. Thanks for tuning in to our latest market update. We encourage you to reach out to your advisor if you have any questions. Thanks so much for joining me. I hope you have a great day.